Our next guest says despite all the trade fears, a tech rally is brewing and chip stocks are going to lead the way higher. Let's go off the charts with Mark Newton of Newton Advisors. Mark, what are you looking at?
Hi, Melissa. So yeah, I think the demise in tech is very much premature. And if anything, I'm betting on a rebound in this group in the next couple months. It comes down to a trinity of really the three things. So first of all, near-term oversold conditions combined with the recent stability in the sector along with the ongoing bearish sentiment. You take a look at the equal weight tech ETF, right? This is the Invesco equal weight ETF for technology versus the broader market. When I take a look at this, we've seen the ongoing uptrend. This has not shown any signs of deterioration. So we know about the antitrust regulation against tech, Huawei implications of this being potentially hurting this tech sector. This has not really hurt technology all that substantially. We've seen this decline of 10 to 20% in many tech stocks, but technology, relatively speaking, is still very much in good shape. The next, we'll look at the semiconductors. We heard Trump's re-election campaign getting kicked off about meeting with President Xi. What happened immediately? We see the stocks jumped to the highest level we've seen in the last 5 days. This sector has gotten beaten up very badly, down really 12% from its highs, about 200 points in the SOX. However, it's up 150% in just the last couple years since the 2016 lows. So I'm looking at this break of the downtrend since late April. We rallied up into early June, and then we pulled back, and now we're starting to make another move. My thinking is we get up to right near 1,500. That would be about a 7% gain in the stocks really over the next 2 to 3 months. So I'm looking at the time frame specifically in the middle part of August up to September. These are the ways I play it. Micron Technology, MU. Stock last year peaked out right around $64 in late May. It's been literally cut in half. Now we're starting to see evidence of this stabilizing just in the last few weeks. The stock jumped over the last couple of days. I think this is an excellent risk reward and a way to play this. I'm projecting a move from right near 34 up to 38 really in the next couple of months. Another one is Xilinx, another one where the stock had pulled back literally about 50% of everything it's done in the last couple of years. A very important area of support near 102. Now you're seeing signs of it starting to reignite yet again. So starting to lift a little bit. I'm also betting on a rebound in Xilinx of between 5 and 10% in the weeks ahead. So I do like this group. I think it's been beaten up unfairly. And if anything, until we see more signs of broader deterioration in the tech space, it makes perfect sense on the eve of what potentially could be an upcoming trade deal.
I mean, a 7% move in the stocks in the next couple of months, Mark, would be an enormous move. And I'm just curious, what is the context in terms of the broader market's move for that to happen?
Well, my thinking is S&P likely gets up to between 30.40 and 30.70 between now and the fall. So I do think the recent movement is very constructive with regards to stocks heading into today's Fed meeting and really the resolution. And if anything, we're still seeing decent breadth, good momentum, ongoing structure. Healthcare and industrials and discretionary have moved to take technology's place recently, but now tech is starting to show some evidence of stabilizing. So if we can all get those working in the same direction, then we could still see gains during a time when sentiment is understandably subdued, given the ongoing threat of potential global cool down in the economy, along with trade tension that hasn't been resolved. So people seem to be on the sidelines, as Tony Dwyer said, betting potentially too bearish on the hedge fund side. So technically, the market still shows signs that it can rally. So I'm betting on that in the months ahead.
Mark, thanks. Good to see you. Mark Newton,
Likewise,
Newton Advisors. Guy.
Yeah, Xilinx rings a bell with me. I mean, we do that thing. We go over to the smart board and we do the power pitch. Remember that whole thing?
And last
year, I mean, it's June already, but last year we talked about how everybody was talking about Xilinx. This year, 2019, 5G, AI, the whole thing. And Mark is right. The stock has sold off, but quite frankly, I bet you Xilinx is in the crosshairs for some of these bigger chip makers, and I wouldn't be surprised if it got gobbled up at some point. Regardless, I think Xilinx, with or without a trade deal, goes higher from here.
Technology and obviously the semis, they're at the epicenter of the entire trade issue. So if you think that we're going to see positive headlines going forward, this is where you want to be. So I agree with Mark, 99%. But if you look at Micron, it's dependent on DRAM pricing. So if you get a pop of 10%, take it, sold, get out of your position, because DRAM has done nothing, and I expect Micron to retrace and move lower.
I don't have exposure. I understand what he's saying about if the market, if they go up 7%, the market goes up something like 4%, is what he was saying. The flip side, though, to me, would be that these go down significantly more than the market. If the market goes down, let's say 4%, there's no deal. I don't love them. They're not. It's not like it's screaming cheap to me, Xilinx.
We keep just talking about macro. We keep blanketing trade war dynamics. SMH obviously center of the storm, but what we are hearing from a bottom-up perspective, company by company, is a tale in of itself in terms of inventories and in terms of the cycle. And so to say that suddenly trade war is a panacea for the whole sector, I don't think so. And 3 days ago, you could have looked at the semis chart and said that was a terrible chart. That was a chart that was basically kicking down to the 200-day and actually looked like it was in a lot of trouble. Meanwhile, if you look at the triple Qs and if you look at mega cap tech, it's actually outperformed, and that's with all of the headlines on the regulatory front. So to me, would you rather? And here I go doing this by myself. I would rather on the triple Qs over the SMH.
Is he allowed to do that?
He just
did. Yeah.